Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike, first trading day of the month. It's Monday, March 1st. So this year, every month has been straight up. You know, we started January and we had a lot of record high. And at the end of January, we pulled back to the 50-day moving average on the SPY. Then we started February. Record high. At the end of February, we again pulled back to the 50-day moving average. Now we're in March. We're jumped up right out of the gate. We're up 600 or 700 points. Now, do I think we're going to get the record high? Maybe. But actually, I don't. The reason is the NASDAQ has too much damage in it already. The NASDAQ has led us higher, and it looks like the NASDAQ is going to lead this correction downward. I think the correction still has more to go. I could be wrong, but that's my opinion. So what I do is use caution, keep some powder dry for better buys. Because when the correction continues, now we're up 600, maybe 700 today. Maybe by the end of the day we get the whole 1,000 back. Now we gave up 1,000 points on the Dow in the last two trading days. On Thursday and Friday, the Dow dropped 1,000. Now we're already recovering 600, maybe 700 of that at the time of this recording. But be careful here. I do not think this is going to be like January was, record high. February, record high. I would use caution here. I don't think the correction's over yet. I think we're going to get more of a pullback here. We'll see. But what I want to talk today about is the Federal Reserve. Now, the Federal Reserve, they really are the reason that the market is going up. Federal Reserve is printing more money, creating more debt, and this is finding its way into the stock market, which makes the market go higher. Okay, no problem with that. But here's the problem. The Federal Reserve kind of painted themselves into a corner. They really only have two choices. Now here's the two choices. Okay, they can keep printing the money, like increasing the debt bubble, and the markets will continue to go much higher. All right, that's one choice. Second choice is they can stop printing money. As soon as you take away the Federal Reserve, the market is not going to just be flat. The market is going to drop like a rock. If they stop printing money, the market will drop like a rock. Well, okay, Mike, so let's just keep printing money. Well, if they keep printing money, the actual money that is in your wallet is going to drop like a rock. We're going to have a collapse in the currency, a collapse in the actual money. People don't get this. You can't just print. Now, MMT, modern monetary theory, says you can print forever. But I disagree. Eventually, this is a dollar, okay? This is a dollar. Eventually, you're going to destroy this. Now, here's the thing. This here is a penny. I don't know if you can see that or not, but it's a penny. Now, in 1920, you take 3 cents, and it would buy you as much as a dollar buys you today. So we've destroyed, in the last 100 years, we've destroyed 97% of the dollar. Okay? 97% of it got destroyed in 100 years. How long do you think it's going to take us to destroy the last 3 cents of purchasing power? Well, I'm not sure, but I think it's going to be very quick if the Federal Reserve continues to print the money. And that's my guess that that's what they're going to do. With Biden in office, we already have a $1.9 trillion stimulus package that's been approved by the House, now going to the Senate. Okay, that's going to come. We're going to get, so basically $2 trillion. All right, but what you don't hear them talking about just yet, well, they're actually talking about it, but the mainstream media hasn't picked up on it yet. But there's going to be another $3 trillion package coming this year. They're calling it the infrastructure package. They're going to use it to build infrastructure. Well, building infrastructure is great if we had the money to build it, but what do they have to do? We don't have the $2 trillion. We don't have the $3 trillion. That's $5 trillion just the first year under Biden. This is printing of money. They don't have it. They have to print it. They have to print the money. And that's where the problem comes in. They're going to print the money. Now, you see, now Biden got elected by saying he is only going to tax the rich people. He's only going to tax the people that make over $400,000 a year. He's going to increase the taxes on them. He's not going to increase the taxes on the middle class and the poor people. Well, what people don't understand is the printing of money is a tax. He is going to tax the middle class and poor people $5 trillion the first year in office. That's $5 trillion the first year. That's crazy. Okay, now who gets hurt when they print this money? Who gets hurt by this debt? Well, that is a tax. Now, they could not charge tax. They could make it so no one ever has to pay tax again and just keep printing the money, keep printing the money. Well, do rich people get hurt when they print the money, or do poor people get hurt more? Poor people get hurt more. Why? Why? Because the cost of everything goes up. The cost of food in the grocery store goes up. The cost of rent goes up. The cost of gasoline goes up. The poor people can no longer afford to live on what their working wages. They go to work, they make a certain amount of money. They go to the grocery store, and oh my goodness, it doesn't buy food for their family. They can't pay rent. They can't put gas in the car. It hurts the poor people more. It's a tax on the poor. Biden is taxing the poor people way more than the rich people. Out of that $5 trillion, where does that $5 trillion flow to? It flows to the rich people, to the people that own the assets, to the people that own the stocks, to the people that own the real estate. They're getting rich, and the poor is getting poor. He is taxing the poor and the middle class like you cannot believe. And $5 trillion is just a start for the first year. By his fourth year, I bet that's going to be 10 or 15 trillion per year, because you have to keep more and more money going in. Once you start this modern monetary theory of printing money, you can't take it back. You can't take back those stimulus checks. You can't take back the unemployment. You can't take back the PPP loans. You can't take back the grants. There's going to be UBI very soon. And once you start, you can't really take it back. So what do you have to do? You have to protect yourself. You have to protect yourself. Now, what's going to be going up with the printing of money? I think it's going to be silver. Now, people laugh at me for buying silver. They say, Mike, you're an old guy. Silver's not going anywhere. It hasn't gone anywhere. I buy gold. Gold. You're an old guy, Mike. Gold's going down. Don't you know? Gold is going down. Maybe. And you know what? You know what? When silver goes down, I get happy. I don't get sad. I was buying Silver Eagles last year, this time, for about $18. Right now I'm trying to find them for $35, and I can't find any to buy. Nobody will sell me their Silver Eagles $35. That's a 100% increase 1 year in 1 year. I bet you a year from now I won't be able to find them at $70. But they're going at $35 right now, and I'm trying to buy them. I'm trying to find them. I want more physical silver. So I actually get happy when silver comes down. I would love to buy these under $20 again. Do I think that's going to happen? Probably not. Probably not. Okay, so silver and gold. This is what I'm buying. It's just what I'm doing. It's not necessarily what's right for you. You do what's right for you, but I'm going to protect myself from the Federal Reserve. I'm going to protect myself from them printing money. Now, if they don't print money, everything's going to come down, and probably gold and silver will come down with it. And that's why you also have to keep some of this available. You got to keep a little bit of cash. But now, do I think cash can go up in value? No. I think the Silver Eagles, I think what you're paying $35 today for can easily be $300, $350 5 years from now. Absolutely. I think these can go up 10 times. All right, let's look at the dollar compared to a Bitcoin. Okay, I'm holding the dollar in this hand. I'm holding the Bitcoin in this hand. I don't know if you can see the Bitcoin, but I got one in this hand. Okay, so this is the dollar. This is Bitcoin. Now, Bitcoin went from basically in March of last year, it was 5,000. Now, roughly, it's 50,000. So this went up 10 times. Now, can you see it? Can you see it? It went up 10 times. Now, maybe it's going to do that again. I'm not saying it's not. But both of these are what is known as fiat. fiat currencies. Okay, Bitcoin is a fiat currency. This is a fiat currency. Fiat currency just means that it's not backed by anything. It's not backed by gold. It's not backed by silver. It's just fiat. Fiat currency. Once again, look at the Bitcoin closely because it's up 10 times this year. Now the dollar's not going to go up 10 times. Okay, so those are two choices of fiat currency. Yes, you can buy those and you can hold those, and I recommend holding some of each of those. I recommend holding some Bitcoin. Absolutely, Bitcoin can go to $100,000. Now, why do I recommend holding the actual real dollars, the real dollars? Because these can buy you some of this. If this goes down, you want to have these to buy more of the physical silver. This is what's going to protect you from the Federal Reserve. Now, the Federal Reserve, it's so funny when Jerome Powell goes before Congress. Jerome Powell's the head of the Fed. Now, Jerome Powell goes to Congress, and Congress goes, thank you, Jerome. Thank you for saving our economy by printing all that money. Thank you, Jerome. Thank you. They kissed Jerome's ass. Let me tell you, Jerome is the problem. He caused this bubble. He caused the bubble in the stock market. He caused the bubble in the housing market. Jerome is the cause. He is not the cure. The cure is to stop printing money and back the money with gold and silver. Now, I know I went on a little bit of a rant today. Maybe you liked it. Maybe you didn't like it. Maybe you agree with me. Maybe you don't agree with me. Hey, maybe you'll leave me a comment. Comments are great. If you like this stuff, give me the thumbs up. Hit the thumbs up button. If you really like it, hit the subscribe button because this is what we're going to talk about. We're going to talk more about this as they continue to print the money. We'll talk about it more. Anyways, my name's Tall Mike. I'm a stock market gambler, and I want you to get out there today and have a great day. Have a happy Monday. We'll talk again real soon. Bye-bye now.